Imagine waking up one morning and realizing that every dollar you've been quietly investing, without stress, without complicated strategies, without constantly watching the market, has grown into something massive. Not because you gambled on the next big stock, not because you predicted the perfect trend, but because you followed a simple, boring, proven strategy built on just 3 ETFs. Imagine looking at your investment account years from now and seeing that what started as $10 a day has turned into hundreds of thousands, maybe even close to 1 million, all because you understood one powerful truth. Long-term investing doesn't need to be flashy. It needs to be consistent. It needs to be smart. And it needs to be simple. Today, we're diving into the idea of the best 3 ETF portfolio for long-term investing, something that almost anyone can follow, whether you're a beginner trying to understand the stock market, someone who's tired of jumping between hyped investments, or even a seasoned investor who finally wants a streamlined portfolio that works while you sleep, eat, and live your life. ETFs, exchange-traded funds, are some of the most powerful investment tools ever created, because they allow you to own hundreds or even thousands of companies with a single purchase. They give you instant diversification, low fees, and exposure to markets that historically build wealth over time. And when you put the right 3 together, the results can be absolutely life-changing. Before we get into the 3 ETFs, you need to understand why this kind of portfolio works. Most people lose money in the stock market not because they choose bad companies, but because they constantly switch strategies. They chase quick gains. They panic during downturns. They react emotionally instead of logically. But successful long-term investing isn't emotional, it's mathematical. It's predictable over decades. And the biggest wealth builders are time, compounding, low fees, and broad diversification. With ETFs, you don't have to guess which company will win. You don't have to attempt to predict the next Amazon or the next Tesla. Instead, you let the entire market work for you. You buy the haystack, not the needle. Now let's talk about why a 3 ETF portfolio is one of the smartest investing approaches ever. Many people think investing requires having 10, 20, or even 50 different funds. But that isn't true. In fact, too many positions make your portfolio messy and your strategy unclear. A 3 ETF setup is powerful because it covers everything you need: domestic stocks, international stocks, and bonds. Or if you want more growth, you can tweak the ratios to match your goals. With just 3 funds, you can own nearly the entire global economy. That means you benefit from innovation, population growth, economic expansion, and global productivity, all without placing huge bets on any single country or company. So imagine again, you invest $10 a day. That's the price of a cheap lunch, or 2 cups of coffee, or less than what many people spend randomly without realizing it. $10 a day becomes $300 a month. $300 a month becomes $3,600 a year. And when invested into the right ETF portfolio with average market returns, that can grow to around $800,000 over several decades. The key is consistency, patience, and letting compounding interest do its job. Compounding is like planting a tiny seed that grows into a massive tree, but only if you leave it alone long enough. Now, as we talk through this portfolio, remember something: this isn't financial advice. You are in charge of your own decisions. I'm here to teach you the principles, the logic, the reasoning behind a 3 ETF approach so you can decide what's right for you. What we're doing is building a simple, long-term, highly diversified investment strategy that anyone can understand. So let's begin by exploring the first ETF, because if you get this one right, you've already done the majority of the work. The first ETF typically focuses on the total U.S. stock market. This gives you exposure to thousands of American companies across the large cap, mid cap, and small cap sectors. In the U.S. market, historically, large companies like Apple, Microsoft, Google, and others have driven enormous long-term growth. But small and mid-cap companies provide additional upward momentum over time. A total U.S. market ETF captures all of this at once. Instead of trying to find the next successful stock, you let innovation across the entire country work for you. Every breakthrough technology, every rising startup, every expanding industry in the U.S. economy becomes part of your overall return. This ETF forms the backbone of your portfolio. It's the engine. It's the growth driver. Over long time horizons, 20, 30, 40 years, the U.S. stock market has historically produced average returns between 7 to 10% annually after inflation. That's why people building wealth almost always have exposure to U.S. equities. With this single ETF, you're effectively owning corporate America. You're owning companies that build the products you use every day, from your smartphone to your groceries to the software running your life. And you're earning a share of all their profits. But relying only on the U.S. market ignores something important. The world is bigger than one country. And sometimes, other nations grow faster. That's where the second ETF comes in, a total international stock market ETF. This gives you exposure to developed markets like Europe, Japan, Australia, and Canada, along with emerging markets such as India, Brazil, and parts of Southeast Asia. When you invest internationally, you're capturing the growth of billions of people. You're tapping into rising middle classes, increasing technology adoption, stronger global trade, and countries that may experience rapid economic expansion in the coming decades. Some investors skip international stocks entirely, believing the US will always outperform. But that's not guaranteed. There have been entire decades where international markets outperformed the US. And diversification is about protecting your long-term outlook. When one region underperforms, another may thrive. By owning the global market, you're not betting on one country's success, you're investing in humanity's collective progress. Now you might be thinking, if we have US stocks and international stocks, why do we need a third ETF? The third ETF isn't for growth. It's for stability. It's the safety net. The cushion. The psychological anchor that keeps you invested during volatile times. This ETF is typically a total bond market fund. Bonds don't grow as quickly as stocks, but they provide two critical benefits: lower volatility and steady income. When the stock market drops 20, 30, or even 40%, as it has many times in history, your bond ETF helps smooth the ride. This is especially important as you get closer to retirement, or as your risk tolerance decreases. Some younger investors choose to reduce bonds or skip them entirely for more growth. And that's okay, your portfolio should match your comfort level. But a bond ETF provides balance. It reduces emotional decision-making. It gives you liquidity during downturns so you don't feel pressure to sell stocks at the worst possible time. And even when rates change, bonds remain one of the most reliable tools for long-term risk management. So as you walk away from this video, carry this idea with you: your future wealth is not created by one big decision, but by thousands of small ones made consistently. Every $10 matters. Every automatic deposit matters. Every month you stay invested matters. Your financial success is not somewhere far away. It's built bit by bit every day you show up for yourself. And if there's ever a moment when you feel overwhelmed or unsure about investing, just come back to the basics. Come back to the simplicity of owning broad US stocks, broad international stocks, and bonds. Come back to the strategy that generations of investors have used to build real, lasting wealth. Come back to the idea that it doesn't take complexity to succeed, it takes commitment. So imagine one last time. Imagine the pride you'll feel when you one day look back and realize that the most powerful financial decision you ever made wasn't a risky gamble. It was choosing a simple, steady plan and sticking with it long enough to watch it transform your life.